Want to invest like one of the greatest investors of all time? You know, the guy who turned a few $1,000s into billions? Well, today, we're diving deep into the mind of the Oracle of Omaha himself, Warren Buffett. We're breaking down his 7 key investment strategies that you can start using today to build your own financial empire. Don't forget to like, subscribe, and share these key points with your friends. They'll thank you later. Look, Warren Buffett doesn't invest in what he doesn't understand, and neither should you. It might sound simple, but you need to treat your investments like you're buying the whole company. That means understanding what the company does, how it makes money, who its competitors are, the whole 9 yards. Don't get me wrong, I'm not saying you need to be a rocket scientist to understand a company. If you're buying Coca-Cola stock, you already understand the business. You drink their products, you see their ads, you know they're a global brand. That's the kind of understanding we're talking about. The key takeaway here is to stick with what you know. If you don't understand how a company makes money, don't invest in it. It's that simple. There are plenty of fish in the sea, so focus on the companies you understand and believe in. In the age of instant gratification, patience isn't just a virtue, it's a superpower. Warren Buffett is famous for his long-term investment strategy. He's not about chasing quick profits or timing the market. He's in it for the long haul, and that's how he's achieved such incredible success. Remember, Rome wasn't built in a day, and neither are massive fortunes. Don't get caught up in the hype or make impulsive decisions based on rumors or short-term market fluctuations. That's how you lose money. Instead, focus on finding solid companies with strong fundamentals and hold on to them for the long term. Remember, time is your friend when it comes to investing. The longer you stay invested in great companies, the more time your money has to grow. Warren Buffett is a master of value investing, and it's one of the key pillars of his success. Value investing is all about finding great companies that are undervalued by the market. It's like finding a hidden gem at a flea market. You're getting more than what you paid for. Think of it like this. You wouldn't pay full price for a dented can of soup, right? So why pay full price for a company that's temporarily undervalued? Look for companies with strong fundamentals, a solid track record, and a bright future, but are currently trading at a discount. One of Buffett's most famous value investments was American Express. When the company was hit with a scandal in the 1960s, its stock price plummeted. But Buffett saw an opportunity. He knew the company had a strong brand and a loyal customer base, so he bought a huge stake at a bargain price. The rest, as they say, is history. Let me tell you something you already know: debt is dangerous. Warren Buffett avoids debt like the plague, and you should too, especially when it comes to investing. Borrowing money to invest is like playing with fire. Sure, you might get lucky and make some quick profits, but the risks far outweigh the potential rewards. Here's the thing. When you invest with borrowed money, you're amplifying both your potential gains and losses. If the market takes a downturn, you're on the hook for those losses, plus the interest on the money you borrowed. That's a recipe for disaster. Instead of gambling with borrowed money, focus on investing what you can afford to lose. Start small, be patient, and let your investments grow organically over time. Remember, slow and steady wins the race. Have you ever heard of the snowball effect? That's what compound interest is like, but for your money. It's the most powerful force in investing, and Warren Buffett knows it. Reinvesting your earnings is the key to unlocking exponential growth and building long-term wealth. Think of it like this. You invest $100, and it earns a 10% return, giving you $110. Now, instead of spending that $10 profit, you reinvest it. The next year, you're earning a 10% return on $110, not $100. See how that works? Over time, those small gains start to snowball into significant wealth. The key to maximizing the power of compounding is to start early and reinvest consistently. The earlier you start, the more time your money has to grow exponentially. Even small amounts reinvested consistently over time can lead to life-changing wealth. This is one of Warren Buffett's most famous quotes, and for good reason. It perfectly sums up his contrarian investing approach. When everyone is buying, it's often a sign that the market is overvalued and a correction is looming. Conversely, when everyone is selling, it could be a great time to buy undervalued assets. Remember the 2008 financial crisis? While everyone was panicking and selling their stocks, Buffett was busy buying up shares of companies he believed in at bargain prices. That's contrarian investing in action. Now, I'm not saying you need to be a contrarian just for the sake of it, but it's important to think independently and not get caught up in the herd mentality. Do your own research, trust your gut, and don't be afraid to zig when everyone else is zagging. Investing always involves some level of risk, but successful investors understand how to manage and mitigate those risks. Warren Buffett is a master of risk management, and it's one of the key reasons he's been so successful. First and foremost, understand the risks associated with any investment you make. Don't just blindly follow the crowd or invest in something you don't understand. Do your research, ask questions, and make sure you're comfortable with the level of risk involved. Diversification is another key aspect of risk management. Don't put all your eggs in one basket. Instead, spread your investments across different asset classes, industries, and geographies. This helps to reduce your overall risk and protect your portfolio from market volatility. Remember, investing is a marathon, not a sprint. Don't let short-term market fluctuations derail your long-term investment goals. Stay disciplined, stay informed, and always prioritize risk management. So there you have it, Warren Buffett's 7 key investment strategies to help you build wealth and achieve financial freedom. Remember to invest in what you understand, be patient, buy value, avoid debt, reinvest your earnings, think contrarian, and manage your risk. Subscribe to Better Investments day by day and retire rich. It's time to take control of your financial future and start building the life you've always dreamed of. Share these insights with your friends and start your journey to financial freedom today. Remember, the best time to invest was yesterday, the next best time is now. Let's do this.